Hello, and welcome back to Global Markets Today. I am your host, and this is your market briefing for Monday, December 22nd. Investors are heading into the holiday week with a massive tailwind as the Santa Claus Rally appears to be in full effect, driven by a historic breakout in precious metals and renewed deal-making in the technology sector. The biggest story driving the market today is the unprecedented surge in gold and silver, with silver shattering expectations to trade near $70 an ounce, signaling a major flight to hard assets amidst continued dollar weakness. Let us go straight to the market dashboard to see how the major indices and assets are positioning for the open. The S&P 500 is trading firmly in green territory, currently sitting at 6,874 points, up roughly 0.5%. The Nasdaq Composite is also pushing higher, trading at 23,411 points, fueled by strength in semiconductor names. The Dow Jones Industrial Average is joining the party, climbing to 48,386 points as industrial giants catch a bid. Turning to commodities and bonds, the action is nothing short of spectacular. Crude oil is holding steady, with Brent trading around $61 per barrel, but the real headline is in the metals market. Gold has broken through to new all-time highs, trading at $4,344 an ounce. Even more impressive is silver, which has skyrocketed to $68.50 an ounce, absolutely crushing previous resistance levels. In the bond market, the benchmark 10-year Treasury yield is relatively calm, hovering at 4.17% as traders digest the latest inflation outlook without panic. In the crypto markets, the bulls are back in control. Bitcoin is staging a recovery, currently trading at $89,423 as it looks to reclaim the $90,000 level. Ethereum is also seeing healthy buying pressure, trading just above $3,029. The sentiment here mirrors the risk-on appetite we are seeing in equities, though Bitcoin remains the primary focus for institutional flows as we close out the year. Now, let us take a deep dive into the top 3 stories shaping the financial landscape over the last 24 hours. First up is the historic breakout in precious metals. As we just mentioned, gold and silver are trading at record highs, but the underlying reason is what matters to your portfolio. Analysts are pointing to a perfect storm of falling real yields and aggressive central bank buying as the catalyst. However, the velocity of silver's move to nearly $69 suggests a massive short squeeze is underway. For investors, this is a signal that the market is hedging against potential currency debasement in 2026, and the traditional 60-40 portfolio might need a heavier weighting in commodities to capture this trend. Our second story is the return of mega-cap deal-making, led by Alphabet. The parent company of Google has announced it will acquire data center and energy infrastructure company Intersect. This move underscores the critical bottleneck facing the AI revolution right now: power. By securing its own energy infrastructure, Alphabet is effectively insulating itself from grid volatility and ensuring its AI capacity can scale without interruption. For the broader tech sector, this signals that the next phase of the AI trade isn't just about chips, it is about the physical infrastructure and energy required to run them. Finally, we are watching a major development in the autonomous transport space. Uber and Lyft have jointly announced a pilot program to launch Robotaxis in London next year, in partnership with Baidu. This unexpected collaboration between American rideshare giants and a Chinese tech leader suggests that regulatory hurdles in Europe may be easing faster than anticipated. For investors in the gig economy, this is the holy grail of margin expansion. If these companies can successfully deploy autonomous fleets in a complex city like London, the path to profitability becomes significantly clearer, justifying the recent bid we have seen in their stock prices. Looking ahead to tomorrow, markets will be paying close attention to the revised GDP figures coming out of the UK, as well as the US consumer confidence data. With volumes expected to thin out for the holidays, any surprise in these numbers could trigger outsized moves, so stay sharp. That is a wrap on your daily briefing. If you found this update valuable, please subscribe to the channel to stay ahead of the market every single day. I will see you tomorrow for another deep dive.